Welcome to our channel, where we provide you with the most up-to-date and comprehensive financial news. Today, we're examining the stock market's resilience in the face of increasing geopolitical tensions. It's a day of mixed fortunes as the S&P 500, Dow, and Nasdaq open higher, demonstrating the market's tenacity. Yet not all shares are faring well, with Boeing experiencing a downturn, hitting an 18-month low ahead of a significant testimony on aircraft safety. These shifts come amidst a backdrop of geopolitical tensions, with a particular focus on the strained relations between Israel and Iran. But it's not all doom and gloom. Despite the uncertainty, global markets are showing surprising resilience. This, coupled with the Federal Reserve's interest rate forecasts and the launch of the first quarter earnings season, paints a complex picture of the current market situation. As we delve deeper into today's market situation, it's important to remember that these trends are part of a larger economic picture. Geopolitical tensions have been a focal point for investors, and their impact on global markets has been limited thus far. The spotlight has been on Israel and Iran, a discord that's been brewing for years. While these tensions have the potential to disrupt markets, so far their influence has been subtle. Oil prices have been on a roller coaster ride, falling for the past 3 sessions due to these geopolitical issues, along with speculations about supply disruptions and domestic stockpile data. Stocks, on the other hand, have been dancing to the tune of Federal Reserve forecasts and the start of the first quarter earnings season. The Federal Reserve's stance on interest rates and Chairman Jerome Powell's recent remarks about inflation data have been key drivers in shaping market sentiment. While these geopolitical tensions continue to shape the market, it's vital to keep an eye on other key economic indicators. Federal Reserve Chairman Jerome Powell's recent remarks on inflation data and monetary policy have also influenced market sentiment. Let's delve a little deeper into this. Inflation is a tricky beast. It's the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Central banks attempt to limit inflation and avoid deflation in order to keep the economy running smoothly. Now, the Federal Reserve, or the Fed as it's often known, has a dual mandate: to foster economic conditions that achieve both stable prices and maximum sustainable employment. But juggling these two objectives can be a high-wire act. Recently, inflationary pressures have been building up. A variety of factors, from supply chain disruptions to labor shortages, are pushing prices higher. However, Jerome Powell has emphasized that many of these factors are likely to be transitory. In response to these inflationary pressures, the Fed has adopted a cautious stance. It's wary about easing rates too quickly, fearing it could stifle economic recovery. Instead, the central bank has indicated that any adjustments will be driven by data. This means they'll be closely monitoring economic indicators to guide their decisions. This caution has had a ripple effect across the financial markets. Rate traders, those who speculate on future interest rate movements, have adjusted their expectations. They've scaled back their bets on rate cuts in the near term. This shift in expectations has had some interesting repercussions. The US dollar index, which measures the value of the dollar against a basket of other major currencies, has dipped slightly. And oil prices, sensitive to changes in the dollar's value, have also seen a decline amid speculation about supply disruptions and domestic stockpile data. Inflation and interest rates continue to be key factors in the financial markets. It's clear that any adjustments by the Federal Reserve will be data-driven, adding another layer of complexity to the market. In conclusion, today's market update reflects the resilience of the stock market amidst geopolitical tensions and economic indicators. We've seen the S&P 500, Dow, and Nasdaq make gains, despite Boeing shares continuing their descent. The markets are showing their flexibility, not succumbing to the political pressure between Israel and Iran. The Federal Reserve's stance on interest rates, led by Chairman Jerome Powell, is also playing a pivotal role in shaping the market dynamics. The cautious approach to easing rates, driven by data, is leading to adjustments in rate traders' expectations. This, in turn, has caused a slight dip in the US dollar index, while oil prices are also seeing a decline due to speculation about supply disruptions and domestic stockpile data. As we navigate these turbulent times, it's crucial to keep a sharp eye on these market indicators. Thank you for joining us for today's market update. Don't forget to subscribe to our channel for more in-depth analysis and updates. Until next time, keep a keen eye on the market.